Hello, this is Baron Tax and Accounting. Join me as I dive into the debate and see if buying a car is really better than leasing when it comes to tax deductions here in Australia. If you're in the market for a new set of wheels, you've probably found yourself torn between buying and leasing. And if you're a business owner or freelancer, the decision gets even more complicated because tax deductions come into play. Many Australians struggle to decide between these two options. On one hand, buying a car seems like a solid investment. You own the vehicle outright and can claim tax deductions on its depreciation. On the other hand, leasing offers lower upfront costs and the chance to drive a new car every few years. When you buy a car, you can claim the business use percentage of the vehicle's expenses, including fuel, maintenance, and insurance. You can also claim the depreciation of the car's value over time. But if the car is only used for personal purposes, you won't be eligible for these deductions. Leasing, however, allows you to claim the lease payments as a business expense, which can be a significant tax deduction. Another thing to consider is the goods and services tax, GST. If you're a business owner, you can claim the GST on the purchase price of the car or on the lease payments, but there's a limit to how much you can claim. The Australian Taxation Office, ATO, has specific rules about what you can and can't claim. To make things clearer, let's consider a scenario. Suppose you're a freelancer who needs a car for work. You can either buy a car for $50,000 or lease one for $500 per month. If you buy, you can claim the business use percentage of the car's expenses, but you'll need to pay for maintenance and insurance. If you lease, you'll have lower upfront costs, but you'll need to make lease payments. The ATO has specific rules and limits on tax deductions for cars, so it's essential to understand these before making a decision. Generally, if you're buying, the tax deductions are spread out over the car's effective life. For leasing, you can claim the lease payments as a business expense. The verdict? Buying might offer more substantial deductions over the long term if you plan to keep the car for several years. Leasing can provide more manageable expenses and the flexibility to change cars frequently. It really depends on your personal and business needs. So, whether you should buy or lease a car for tax deductions depends on your situation. Understanding both options can save you a pretty penny. If you've had experiences with buying or leasing cars, I'd love to hear about them in the comments below. And if you're interested in more tax strategies, check out our next video where we dive deeper into getting the most out of your deductions. Thank you for watching.